Hi, folks. It's Todd from Cadenza Financial Planning. Thanks for joining me. So this week, I wanted to give a brief overview of what it is that Cadenza does, and more generally, what comprehensive financial planning should look like. So there are several pillars that make up the foundation of financial planning. And just as a building might collapse, if you pull away one of those pillars, these areas of planning all serve to hold up the whole structure. So what are these pillars that make up comprehensive financial planning? So the first pillar is investment management, right? It's the sexy one everybody always talks about. It's the stock market, it's mutual funds, it's investment portfolio construction. It's actually the one pillar that we have the very little control over, in fact, the least amount of control. Yes, the one that's focused on primarily when you're dealing with most financial firms. The second pillar is protection planning. That's things like in the form of insurance, really. It's how you protect your income, your assets, your health, your family, and your future. And it really plays a key role in the long-term security and success of your financial blueprint. The third pillar is estate planning. It's really foundational. It's all those things you hear about as far as documents. It's the trusts and the wills, the powers of attorney, the medical powers of attorney, the durable powers of attorney. But it also involves legacy and gifting as well. It's what you want to happen when you're gone or you're incapacitated. These things really need to be reviewed and updated every few years. The fourth pillar is tax planning. Taxes are really by far the largest expense any of us ever faces. And tax planning looks at how you structure your income, how you invest, how you realize gains on your investments. All these things affect how much of your hard-earned money you actually get to keep. The next pillar is entity and business planning. So it's really about devising the optimal entity structure to minimize taxes and to protect your family and your business. Structuring entities really involves protecting your investments, your stock portfolios, your real estate, and so on. Also, COVID exposed how important this pillar really is. I helped several clients and small businesses navigate the PPP loan and the EIDL and, a lot of the patchwork pieces that were put in place as a result of that. And as a result, my clients and businesses were able to take advantage of those things. The next pillar is one that is really not touched on too much. It's asset protection strategy. And it somewhat overlaps with general protection planning, that pillar, but it's really impossible to give comprehensive planning advice without incorporating an asset protection strategy. So it's an overall strategy to protect from anyone or anything that can take. So that would be lawsuits, the IRS, the stock market, a long-term care event, divorce, disability, and so on. So what do these pillars mean, and how does Cadenza Financial Planning help folks build and maintain them? So investment management is the first pillar, and it involves portfolio construction that's based on your specific risk and your time horizon, much like most financial firms will do. But it's also impacted and informed by things like your needed cash flow, your specific tax situation, and really a myriad of other things. So Cadenza uses low-cost investments, plus we do a tax-efficient overlay in our portfolio management within a plan that's tailored to your specific needs and goals. So the next pillar, protection planning, every year we run an analysis of what it is that you need protected. If you have enough or too much insurance coverage, or if there's a risk that's potentially exposing your whole financial situation to disaster. Every year we do the stress tests on risks like death, disability, the need for long-term care, really any other or unforeseen stuff. So the vast majority of investment or wealth managers will at this point have exhausted their ability and or willingness to progress beyond these two pillars. And that's primarily because they have traditionally been the most lucrative when it comes to investment insurance product sales, and by extension, the attractive commissions that are paid to those individuals for selling them. So the remaining pillars they may touch on, but it will likely be in the context of referring you to someone else who specializes in these areas. That would be estate attorneys or CPAs, business advisors, for example. The next pillar is estate planning. So I don't draft trusts, but as a certified estate and trust specialist, I can help you craft what it is that you want in those essential documents and save you a tremendous amount of time and expense when it comes to time to sit down with an estate attorney to actually draft them. So if I can turn 4 hours of billable attorney time into 1 hour for my clients, I'll feel like I'll have scored a win for them. Additionally, every year, my ongoing financial planning clients can expect a trust review. So the reason I do this every year is that tax laws change every year. For example, last year's Secure Act made retirement account language in nearly everyone's trust obsolete. This year, Biden's proposed changes to estate and capital gains taxes are likely going to prompt the need for further revisions, and so on. So for these reasons and others, Cadenza does an annual trust review with all of our clients. The trust and the documents that accompany them can become obsolete. And for this reason, it's a fundamental review that we engage in to make sure that everything is up to date and relevant. The next pillar, tax planning, again, by far the largest expense any of us face throughout our lives is taxes. Nothing comes close. So there are very few people whose long-term investment returns have outperformed their tax liability over the course of their lifetimes. There just are, which is why it boggles my mind that most financial advisors balk at giving advice. I mean, you think that the single biggest impact on your overall finances, taxes, would be central to the services and advice a professional is charging you money for. But in most cases, you'll simply get a referral to a CPA, of whom most are incidentally are also not really equipped to do much in the way of proactive tax planning. So if it's unclear at this point, I'll just lay it out here bluntly. If you're working with a financial professional, an asset manager, wealth manager, investment manager, whatever they want to call themselves, who will not give you tax advice, I don't care what they say, there's no way your financial plan is even remotely comprehensive. Now, I may be in a privileged, somewhat biased situation to be as blunt as this, as I'm an enrolled agent, which is the highest credential that the IRS awards. An enrolled agent is a person who has earned the privilege of representing taxpayers before the Internal Revenue Service. So not only am I willing and able to give tax advice to my clients, I'm also privileged to defend that advice in front of the IRS, though I don't suppose most people would consider that a privilege. The point is, I went through the training, the credentialing, and I go through the annual continuing education to keep that knowledge base current, because I so strongly believe that it's such a huge part of financial planning, and it provides an enormous benefit to the clients that I work with. The next pillar is entity and business planning. So Cadenza helps both businesses and individuals from a planning perspective. For businesses, it could be ones that are in the exploratory phase, ones just starting up and in need of help with analyzing the best entity to operate the business from, or ones that have been in business for years but may need help with tax classification or benefit structure, or really any number of business-centered issues. Do you operate as a sole proprietor, an LLC, an S Corp, a C Corp, an LLC taxed as an S Corp or C Corp? What's your best situation for your business? Now, you don't necessarily need to have a business to explore the benefits of entities. There are several ways to mix estate planning and tax planning and really all of the pillars, and use entities to your benefit. If, for example, you have a large after-tax investment account, a trust account, an individual account, not an IRA or 401k, that account could be exposed to risks like lawsuits or divorce, for example. So creating a disregarded entity for the sole purpose of segregating that large asset can mean the difference between keeping it and losing it should something happen. Really, it can be a pretty cheap insurance policy. So Cadenza can help you decide on entity structure and do all the state filings, draft operating agreements, and share assignments, and help you establish an accountable plan for reimbursing business expenses. So again, if you're working with a traditional financial advisor, it's unlikely they're going to do any of this for you and will probably refer you out to someone else. So the last pillar, asset protection strategy, is you're rarely going to find or encounter an investment or wealth manager that it really addresses this pillar outside of the context of selling you an insurance policy. So what asset protection means for Cadenza is answering questions like, do you have a vacation home, a brokerage account, anything of worth, really? So what are the threats to all these things? What we look at are solutions to mitigating all these risks. What's the cost of probate if you don't have all your assets in trust? Do you have rental properties? And if so, in what state? Are they segregated from the rest of your assets in their own entity? Rental properties are really a hotbed for lawsuits. by the way? Are the properties in your own name? What happens to your assets and your family if you're in a car accident and are found negligent? Do you text while driving? You're 6 times more likely to have an accident related to texting than to drunk driving. Do you have a business? What kind of liabilities do you have personally that are related to that business? Are you more likely to lose money in the stock market or be sued for negligence? The IRS is your #1 creditor every year. How do you protect as much of your money as possible from capital gains taxes and estate taxes? 69% of people 65 and older will need some form of long-term care in their lifetimes. How will you pay for that? Is your trust properly funded? Does your state require multi-member LLC status in order to provide the asset protection typically sought by someone who's forming an LLC? So you can see there's a little bit more to financial planning than just picking a bunch of mutual funds and telling people they need to save money for retirement, at least as financial planning is practiced by Cadenza. For most people, the prospect of financial planning or working with a financial advisor has always been daunting. And I realize I've thrown a lot of things at you today, but you can see how planning is more than just asking you how you want to invest. It's one of those things that you probably need to do, but is typically been put off for one reason or another. There's no time, you don't think you have the resources, you think you won't be able to retire, you'll die penniless, so what's the point? The prospect can be pretty intimidating, and let's be honest, there are 1,000 things all of us would rather be doing. So what my goal is when I work with clients is to take you from being confused and ill-equipped when it comes to your overall financial strategy and move you to a place where you're confident and well-informed about your financial plan as it relates to your long-term goals. We don't get this education growing up, and unfortunately, it's left to the financial services industry to educate us, which is, under the best of circumstances, a conflict of interest. An industry that's designed to sell you products obviously has a stake in guiding you toward what's in their best interest. So we won't go into the worst circumstances, but I'm sure you're all familiar with the countless examples that have given rise to such a distrust toward the industry. So let me ask you this. Are you going to keep up with changes in tax law? Are you going to research your own investments? Are you going to review and revise your own trusts and entities as your life and your business evolve? Or do you want help? That's what Cadenza is here for. We function as the quarterback for your overall financial life. And obviously it wouldn't be a presentation without the obligatory football reference, right? So thanks so much for tuning in today. And I hope you join me next week when I walk through an example of what financial planning looks like and the platform that Cadenza uses to both create and maintain our clients' financial plans, and the robust functions that platform has to model just about anything that you can think of. So until next week, please feel free to reach out to me with questions at todd@cadenzafinancial.com or visit cadenzafinancial.com to learn more about us or to schedule a no obligation consultation. Thanks again.